Alright guys, Candle Range Theory Trader back with you with another video showing you the easiest way to trade the Power 3, normally taught by ICT, but using the Candle Range Theory to do so. So, going to be a very informal video, but the goal with this video is to hopefully make the pattern that we're looking for easy to see. So first I'm going to show you the Power 3 indicator, or Power 3 pattern, and then tie it to the counter range theory. That way you'll understand what we're looking for and exactly how to trade it. So this is the ICT Power 3. It's just the concept of three types of price movement that we're looking for. Accumulation, which is a range. A manipulation, which is like a fake out, however you want to put it. So people call it a stop hunt, whatever you want to call it. And then distribution, whereby price shoots up against the prior move and just kills everybody who went short. Okay, so see this? We got accumulation, 1, manipulation, 2, distribution, 3. Okay, power 3. Easy, right? Same thing in reverse. Accumulation, that'll manipulate above this range and then distribute down, which is the real move, the real trend of the day or the time period, etc. So here's the trick. Now let's compare that to the counter range theory, because ultimately, it's really the same thing. So if I go to the candle range theory, what do we notice? We just look at this one image right here. And I wish I could make it a little bigger, but if I go here, I think it'll let me do that. Yeah, here we go. Oh, is this a video? Okay, no. All right, here we go. Okay, see that? So you got the range, that's the accumulation, manipulation, distribution. Power 3, accumulation, manipulation, distribution. Okay, so how do we know, though, which ranges, how do we spot accumulation and manipulation? That's the main thing that we want to see. Here is the easiest way to do that. Okay, the easiest way to do that. All you have to do is to use the prior day high and the prior day low for your accumulation. Okay, and then your manipulation is going to take place above the prior day high or below the prior day low, and then you're looking for distribution to just continue up. But let's draw this so that you see this. Actually, let's relate it to this range here. Okay, so range high, this would be like the prior range high, prior day high. This would be like the prior day low. Okay, so our trading window is above, if in this long example, you're looking for price to close above the prior day low. That's your signal to go long. And ideally, you want to see a fair value gap somewhere near the prior day low to show that there's momentum or life in the trade. For instance, so let's draw this out. Let's say this is our prior day high. This will be our prior day low. And then we're looking for my best tool here. Where'd it go? There it is. You're looking for a price to just accumulate inside the prior day high, prior day low, and eventually go up and then close back inside of it. And ideally, your best entry for distribution will be a fair value gap below, not above, below prior day high. And I'm going to put that right, like my shapes. There we go. Right there. That's your trading window. Right there. Okay. Fair value gap below the prior day high. That's all you're looking for. This is just the short version. Okay. So the fair value gap should be right here above prior day. If we're using this, see this box here? It's kind of hard to see because this is dark. But let's just say there's a line that extends for this being the prior day low. The fair value gap is going to take place after the manipulation. So after the manipulation takes place, then you go ahead and hop on in the trade. So let me show you a real trade that I'm in right now. Let me get rid of all this. I'm on Euro, New Zealand. here. I'm gonna have to replay it a little bit to show exactly how it shook out. Okay, and let's see here. My indicators back up. All right. Now see how this is the prior day high right here. Manipulation above it. Manipulation above it, and then I'm looking for distribution once price closes back inside the prior day high and gives me a fair value gap, a bearish fair value gap. So anytime price retraces into it, that's fine. Go ahead and get in somewhere in there. Your stop loss can go either above the fair value gap or above the high of the day. Either one of those is fine. Okay, either one of those is fine. All right. But that's the power of three right there. So in order though to make this easy for your accumulation, oh, where'd it go? Okay, let's go back up. No, let's go back. Let's just go back. There it is. All right. So for your accumulation, don't guess. All you're looking for is the manipulation. Your accumulation is already done for you. Use the range of the prior day high, prior day low. Okay. Once you see that, then you say, okay, all I'm looking for is for price to manipulate or just do a false breakout below the low, and then it has to close back inside and continue up. And then for shorts, it has to go above the prior day high, just like it did here. Let me go back to the live chart now. Okay, right there. You see price is still falling. Okay, but price manipulated above where this red line is. This was the prior day high. That line disappeared because it's a new day. Asia already started. But price manipulated above the high, and then I'm looking for it to distribute. The main way to know that the trade is valid is if this fair value gap right here holds. Okay, it may wick it, but it should still hold. And a good risk to reward is either 1 to 2 or 1 to 3. You know, I've seen some do as many as 1 to 4, even 1 to 5. Price targets though, just 1 to 2 though is your safest bet. In all honesty, I think I'm doing a 1 to. I'd like to get a 1 to 3 on this, but you know I'm not going to be picky. So, but that's it. That's the easiest way to trade the power of three. The main thing is that your accumulation range. Just use the prior day high, prior day low. And again, you're just trading false breakouts to make it simple. Okay, but your main indicator that trade is good is that price is creating fair value gaps and showing momentum to the upside or to the downside, like I just showed you right here. This fair value gap right here. So just to beat a dead horse and put this in the ground, let's take a look and see what may have played out today. Let's go to right about there. Like I showed you this one. Let's see if there were any others. There were a couple. Yeah, like right here. Okay, so you got the prior day low right here. This indicator is called mark levels. You go to indicators and on TradingView, type in mark levels by mark tools. It'll label all that stuff for you. Prior day low, prior day high, or just go to TradingView, type in prior day low, prior day high. It'll pop up. Okay, but you see here, so prior day low, the prior day high and low is our accumulation. This right here is manipulation. Okay, where this box is right here, we're calling that manipulation. I'm going to get rid of this entry here because I didn't take this trade. Um, okay, but you see where this box is? Now, I'm not trading this gap down here. It's a good sign to see a fair value gap, but we're not trading manipulation. I'm not trading down here. I used to, and you can make a lot of money if you can catch good manipulations, but if you try to trade manipulations, you're going to get manipulated and sometimes you get stopped out. So I prefer to just trade straight distribution fair value gaps. That's the safest bet to me, and it can give you a smaller stop loss. So our first fair value gap after the manipulation was right here at about 1240, 1245, 1230, right in there. That's the ideal entry because this is the first fair value gap that was created. So right there would be your perfect entry. And like I said, like we do like a this is like a 1 to 4 with a 10 pip stop loss. So that right there is the entry. Now, is it 100% though? Of course not. But is it what? But this is what I'm looking for. And the safest bet is actually going to be. Also, you can aim for the prior day high as well. That could be a 1 to 2. Let me go to the live chart. I don't think it hit it just yet, but yeah, it looks like it's on its way. This is the prior day high all the way up here though, not this line. Okay, but this right here is this right here. Okay, accumulation, prior day high and low, manipulates below it, closes back inside the range, continues up. Same thing, prior day high up here, prior day low right here, pokes below, distributes up. So your trading range though is right in here. Once it closes and starts to show fair value gaps in the direction of your bias, you go ahead and get in there. And just like I said, 1 to 2, 1 to 3. If you want to try to aim for the prior day high here, and just flip this upside down. But it's the same thing, just with a different name. Like yeah, power 3, candle range theory, supply and demand. I mean, call potato potato, call it what you want, but it's really just the goal is to see it. So that's the point. And all you need is just a high and low and a decent fair value gap indicator, and that's fine. Do you even need fair value gaps? Not really, but I like them because that's price action showing momentum. So I prefer to see a fair value gap instead of just taking the trade once it closes back inside the range. I like to see momentum. So that's it. Hope that helps. Easiest way to trade the power three. Just stick to those daily highs and lows. You should try to aim for like a 60% win rate. You'll be fine. Check out the prior video as well about how to manage risk. And like I said, you'll be fine. And just don't give up on the method. Just spot that manipulation. Wait for the manipulation to be over and focus on trading distribution fair value gaps. Okay, distribution fair value gaps. That's the key. Don't trade manipulation. Just trade distribution fair value gaps in your goal. All right, so thanks for watching. Appreciate it. Subscribe for more channels. Subscribe for more tips, videos, etc. Have a great day.